Imagine you save up $10,000. You've been dreaming about starting your own business. Freedom, no boss, no alarm clock, just you, building something real. So what do? You do what most people do. You pick something that feels right, something you can see, something familiar. And that's exactly where most people lose everything. Today, a millionaire is going to tell you 3 businesses you should never touch and what to do instead. Here's the uncomfortable truth about how most people choose a business. They don't research markets, they don't study competition, they follow emotion. Someone loves fashion, so they start a clothing brand. Someone loves cooking, so they open a restaurant. Someone sees a YouTube ad about trading, so they open a brokerage account and start day trading. All 3 feel logical, all 3 feel exciting, and all 3 have destroyed more savings accounts than almost anything else. Let's break down why. Business number 1, a clothing brand. Walk into any mall, open any app, scroll for 30 seconds. How many clothing brands do you see? Hundreds, thousands. The fashion market is one of the most crowded spaces on the planet. Big brands spend millions on marketing just to stay visible. As a beginner with limited capital, you're not competing on a level playing field. You're showing up to a Formula One race on a bicycle. Passion is not a business strategy. Business number 2, an independent restaurant. Gordon Ramsay's Kitchen Nightmares isn't just entertainment, it's a documentary about what happens when people underestimate the restaurant business. Thin profit margins, high overhead, staff problems, inventory waste, and now people are eating out less than ever before. Delivery apps take a cut, rent keeps rising, and the failure rate. Studies consistently show most independent restaurants don't survive their first few years. The restaurant business doesn't punish bad food, it punishes bad numbers. And most passionate restaurant owners never look at the numbers until it's too late. Business number 3, day trading. This one is perhaps the most dangerous because it looks like investing, but it isn't. Real investing builds wealth slowly, quietly, over time. Day trading is closer to gambling with a spreadsheet in front of you. Most people who teach day trading online are selling courses, not retiring off trades. Think about that for a second. If someone had a system that consistently printed money, why would they sell it to strangers for $997? The data is brutal. The vast majority of retail day traders lose money. The market is controlled by algorithms, institutions, and decades of experience. Jumping in with savings and a YouTube tutorial is not a strategy. Here's the psychology behind all 3 mistakes. We're wired to prefer visible results. A clothing rack feels real, a restaurant feels real, a trading chart moving in real time feels real. Long-term investing feels boring, slow, invisible. But that's exactly why it works. Wealth is almost always built in the background, not on a stage. Instead of chasing businesses that feel exciting, focus on building real assets, index funds, dividend stocks, skills that compound over time. The millionaires who last aren't the ones who moved fast, they're the ones who moved smart. The businesses that look like opportunities aren't, and the path that looks boring, that's usually where the real money is hiding. Don't build what feels exciting. Build what actually works.